this is one of the chart templates that I have. Now I will show you what I do actually every day with this. I'm enlarging it. Now see, these are the alerts. Don't focus on the specific. What I saw is that yesterday there was with the volume of breakout RSI above 50. Somehow I like the chart. Okay, and there was a downtrend that has ended possibly, and possibly we are on the verge of moving higher. So I have created an alert. You can see if I talk about, there is an alert has been created for me tomorrow when the price, because in the live market I cannot track 500 stocks. Okay, so you can see I have almost 270 alerts. I have not completed putting on all the alerts. So here that's why it is 270. By the time I finish my homework for the Monday, it will be around 50 alerts there. So you can see I have put an alert. If it moves above this, so it can be a breakout candidate for me in terms of trading. Okay, so you can look at them. This way you need to work on all maybe 200 300 stocks, and for me working on each stock take 20-30 seconds. So if suppose I am talking about Larsen and Toubro, you see how fast I will do it. Larsen and Toubro I type. Okay, so I can see that if there is a breakdown below this level, there can be a selling opportunity. Okay, so what I will create is the Larsen and Toubro crossing down 1350. So I am creating an alert. So see, alert is created. If it trades below 1315, it can go down. So similar way, you have to put alerts, and I want to put one more alert. If it moves above this, I think it can move again above 77, but I'm not putting it anyways. So you can see that each for putting me each stock, it takes a much smaller time. My Polycare had a good breakout, but it failed. Let me put an alert: crossing above, crossing up 1455. So you can see, how soon I can put an alert. So this kind of homework over a period, over maybe couple of 200 stocks you have to do. There are other ways also. You can scan something. So Balakrishna Industries, let me put alert above 1685. Okay, so crossing up 1685. Sorry. So this homework of looking at the stock, looking at the parameters, because my eyes is very trained, I take maximum 30 seconds for some working on some stock. But you may require a little bit more time to do similar things. So initially you follow only 20-30 stocks, or start with 10 stocks, and then you move to 20, and slowly the higher number of stocks. But this homework you need to do, so that your alerts are set. You don't, if you are working in a different profession, you don't need to always focus on this. When the alert will be there, if there is sound in your PC, when it will be hit, like Concor was hit, see, last time. So when Concor was hit on this day, and I spoke about this, so there was an alert on Concor, and Concor gave me an alert that it was going to move up above this. I put, and it moved up. So simple point is that this thing should be there, so that you know when the stock is moving and when the stock is not moving. Like I am putting for a sell trade, crossing down, move beyond 522. So these things would let me know by a sound, and when there is a sound is there, see, an alert is created. So when there would be a sound, I will get to know that okay, this thing has happened and there is a trading opportunity. I need to work. Otherwise, I cannot track 500 stocks in a live market. So how to put the alert on the basis of what, that we will learn over a period of next 6 months. So first couple of months will be learning technical analysis, and during that time I will also share few ideas over the next 6 months, which will be culmination of all the things that you will learn. But few things, if you don't learn initially, don't be upset about that, because over a period of time, basically over a period of time, you will learn all the details. Okay, so let us start with the topic of today. No, it is not expensive. Okay, that is very important point. One need to you had put out, Avnish Patraji. So see, you need to have a professional software which give you like instant alert and a lot of I would say exploratory capacity in this software. So you can do a lot of things with this software. TradingView is not at all expensive. Uh, See, TradingView, you need to have the premium plan over a period of time. You understand? I am having the premium plan. Why? Because in the premium plan, you are allowed to have 400 alerts. And there are a lot of many features you have in multiple multiple devices also. So have this TradingView premium version over a period of time. Maybe within next couple of weeks to 3 weeks, try to have it. What you do is that when you initially go to TradingView, let me show. So suppose initially you go to TradingView. So see, here you can see premium. So you can you will be prompt to adopt a plan. So go for trial initially. So what they tell you is that their plan is almost $840 or $760. I don't remember actually. It is $720 maybe it was. But then what will you will do is that when you opt for 1 month optional trial period in the premium, within your trial period they will give you an access. They give you an offer to actually go for annual plan. So what was $720? We got it at $288. Okay. So at $288, we got, which is almost 21,000 few hundred rupees for a year, and which is perfect for something which is giving real time everything information in a perfect way. Information is not delayed. Information is not in a mistaken manner. So I think it was great. It was a great. It is a great tool that every professional trader should have, because you want to take trading as a profession. So with the free tools, you cannot do all this. I don't have any idea about Sensible. You can talk to Vivek sir to know. I have never used Zerodha as a platform, so I am not the right person to talk about it. But I have used many softwares like Advanced Gate. I have used Reuters. I have got uh, Fox Trader. Out of all of them, the most I like is this one. So this is one of the best packages and reasonably priced packages, because others are more expensive. Okay, so for a trader, I think this is a web-based platform, and this is good, because in your office computer, if you are office goer, you cannot install Fox Trader and use it there. You need to have a web-based platform on it, and for me, it is a great platform. Okay, so that's said and done. Let me move to the topic that we are going to study. Okay. So at the very beginning, let us first understand a few things about Dow theory. which I am not telling as a part of Dow theory, but you understand that there are mainly three phases in the market. Okay, one is when the market moves down, it is called downtrend. One is when the market moves up, which is on the uptrend, and when the market is not having any clear direction, that is called a range bound movement. Okay, so uptrend, a downtrend, and a range bound movement. So these three phases are there in the market. Let me go to the Nifty chart, it will be more clear to all of you. So this is a downtrend that is right now taking place. It can eventually move up. Okay, this was an uptrend, and this phase was a phase where there was no clear direction, so it was a range bound phase. We generally will try to avoid trading except of option selling, and that you will learn from Hidden at this phase. This range bound phase we will try to avoid. This phase when prices are making higher highs and higher lows. This part is very important. This low is higher than this low. This low is higher than this low. So higher highs and higher low is a sequence that is representative of an uptrend. Lower high and lower low. This high is lower than this high. This low is lower than this low. So lower high and lower low is a representation of a downtrend. So always remember this, that when you are trading in a market, you are either dealing with an uptrend or with a downtrend or a range bound phase. In range bound phase we don't do anything, because when there is a no clear pattern of higher high and higher low, we don't do anything. But when we are in an uptrend and downtrend, it is easier for us to make money. So whatever trade we want to take in a at a place where the risk return parameter is relatively favorable. Okay, now I will not deal with this chart because this is all the indicators that we have not learned. We will try to go to chart platform, and we will try to begin it from there. Okay, just a second. So I will try to load a chart platform. And because this is a 3-hour period class, we will have 2 5 minutes break, I would say, one at 2 p.m. and one at 3 p.m. Okay, so I am opening a chart platform which doesn't have anything. Okay, now always remember, when we are talking about charts, what are charts? Charts are basically price over time. So this is called candlestick chart. I will begin with the more basic form of chart, that is line chart. Now what is line chart? Every period, now this is the daily chart. I will start with the daily chart, and this is the volume part. So chart has only 3 elements: price over time and volume over time. Now this is the most basic form of chart. What it does is that every period it takes the closing price and it plots the closing price, and join the closing price, you get this. This is the most basic and most minimal chart information that so I can see Mr. Ramakrishna, you have WhatsApped me right now, so please, I will reply you later when the session is over. I cannot focus on that right now, so I will respond to you later. Okay, now this is the closing price right now, if you can see, and the factor is that each closing price each closing price connected gives you a figure like this. But this is not the complete information of what happened during this. This is only the closing price. Okay. Now let me move one step forward. There are 1,000 kind of way of representing chart, but the most useful are or most common are line, bar and candlestick chart. Out of that, 80 to 85% people use this candlestick thing only. So I request all of you to uh, look at this candlestick chart uh, more significantly, because this is used by almost 85 to 90% of traders. But candlestick charts came much later. Let us focus on the bar charts before that. Now, this is the bar chart. See, you can see few of the bars as green and few of the bars as red. And you can see every bar has one left elongation and one right elongation. Now, let me describe what they are. See, this left elongation is the open and this right elongation is closed, and the high of the bar is high during the day and low of the bar is low during the day. Now, because the close was below the open, the body is red. Compared to that, if I look at this, the close was above the open, so this period, this bar was green. Otherwise, the highest point is the high and the lowest point is the low of the bar. So this is the representation of the chart in the form of bar. Okay. Now, if I go to the third one, okay, that is the candle. Candle gives me a more visual approach. Now, it has all the same things about the bar. Like this is upper shadow is the highest point and the lower shadow is the lowest point, as it was in the bar. But this body is either red or this is green. Why it is green? Green because the close was above the open. So we have a green bar, and here the close was below the open. So it was a red bar. So this is the bar, and see each bar represents something. Where we can see very insignificant body. This is called doji, that we will learn later. This is called doji. This signifies indecision in the market, and when there is the indecision, market moves sideways. We can see generally move sideways. There was sideways movement. Okay. When there are big strong bars, generally red bars, generally these are called marabusu kind of candle. This candle and this candle, we will learn them later. Big red bodies, market moves lower. Okay. Similarly, big green bodies, generally market try to move fast on the upside. So this is the thing, that from each individual character of each candle, we can learn about the momentum of the market. So that's why candlestick chart is most accepted or most preferred way of charting in the market. So I will like to take few questions at this point of time. Any questions regarding what we have learned? And then we will take a break, and then we will come back and start again with the PPT. Any questions? No questions? Okay. So Ramakrishna sir is asking, after consolidation, a stock moves 20% in a day and then fall down. Sir, this is not related to what we have taught. I will like to have you, because all these questions that you are asking, these things are most about market price action. This will come when I will go a little bit deep into the subjects a little more. So please wait till then for asking the question. Please ask question on whatever I have taught till now. On that, if you have a question, it will be great to, I will be happy to answer. 10 stocks to start with. Okay, let me tell you 10 stocks to start with. Everyone note it down. I am also writing down Reliance, I'm writing it down in the chat window also. So Reliance, Tata Steel, third is Tata Motors, fourth is Axis Bank, fifth is ICICI Bank, sixth is Maruti, seventh is Infosys, eighth is Adani Enterprise, ninth is Bharti Airtel, 10th is DLF. So I have included stocks which are volatile. I have included stocks which are relatively stable like Reliance. All these stocks. So these are the 10 stocks you can start studying initially. That will give you a good idea about the overall momentum of the stock, overall price action of the market. Along with that, definitely follow Nifty and Bank Nifty. Okay. So this is also an important factor. Also follow Nifty and Bank Nifty. Okay. So I am putting another alert on Bharti Airtel. So this is my habit. When I am continuously looking at a chart, I find the important level. I always mark that so that it is useful for me next time. So no question as of now. No more questions. I think. So let us meet in next 5 minutes and let us begin again. Okay. So it is 13:50. Let us start at 13:55, 56 again. Okay. Thanks. Take a break, have some water, and we will join back. Thank you.